start recording. I think okay. I don't know. Okay, so let's analyze this market together. So this gold on 4 hours time frame. You can clearly see the price. 4 hours time frame. We do have this zone, which it was a good demand zone, and the price was just break below. And for now, we can see the price is kind of retracing to this zone. So we are at this psychological region. So we're expecting maybe the price continue selling because it has break, or which it can be a fake out and maybe push up. So that having that in mind, maybe we can go to a smaller time frame like 1 hour. Okay. So from here, we just want to mark our break of structures and maybe see where the price is moving. Okay, from here, you can clearly see this is the point where the price break recent low, continuing downtrend. So we'll mark this on break of structure. And clearly, we see these levels is where the liquidity lied, this level. Okay. Remember, when you're using a liquidity graph, you always need to see a movement, then accumulation to generate liquidity, and then a drop. So from here, you can maybe identify this zone being your break of structure. Then you find liquidities above this top, double top. I mean, so just mark this zone X for now. And where you place your entry, you always place just above your liquidity. You put your entry point just there. You want to have a good risk ratio of something. Yeah, this. You can adjust that with that. That's a good. So you want something like this. You want to play out something like this for continuation. So with all these conditions, it will help us to have that good setup at the end of the day. So that's what we'll be looking at in these charts. Okay. So from there, clearly you can see this with the liquidity region. Okay. We'll put color so that maybe it can be written right. Oh, that's wrong. Oh. So that zone will be a liquidity zone. Okay. So from here, this was the liquidity zone area that you are not supposed to open your trades. You could have maybe focused on this small order block, or maybe a point of interest. Other people may call it point of interest. So you can see clearly when this price, when it push and take out this liquidity, tapping on that POI and dropped like how many pips? Like 1,000 pips, 160 pips, which is good in gold. Okay, let's now move to where the market is right now. You can see clearly that play out had already happened, so we're not going to focus on this region for now. We're not going to focus. So we want to see what the market is doing right now. Okay, clearly from here, if we switch to 30 minutes time frame. Okay. So let me just even open the indicator of Asia, not Asia. Yeah, the sessions liquidity range. You can see this is where the new this is where Asian opened. This is where its lowest point of it. So right now, currently we're at this region. So we want to see this movement for the day. Okay. So we are not going to focus on this anything past yesterday. So because this is the recent daily high, I mean, and we all know that this part already been played out. So we're not going to focus on this part, and we just focus on this region for today. Okay. Because we are day traders, maybe day traders. So for now, let me just close those. Just close this. Then we go back here. Okay, So on 30 minutes time frame, we want to focus on things. We want to see break of structures and maybe liquidity to be grabbed. So we can switch even to a smaller time frame. Having in mind this is the recent, this is the Asian, maybe this is the region Asian played out. This is the lowest point. Let me just mark so that you can have that in mind. Okay, from here, what does the market do? We are in downtrend. Okay, it's clearly from there we are in a downtrend in that move. So we'll just be marking this break. So you can see whenever the price was this region, it breaks. Maybe even we can use the line so that it can be more visible for you guys. So let me mark those breaks. You can clearly see these demands on what were created. The price always came back and take out those breaks. So we just be marking this break of structure there. Another break of structure we do have, this region. Okay, you can mark all of them is better, but for just education purpose, let me just be marking all of it for today. All right, let's now go back to the candlestick. Sorry for that. Okay, from here we do have this break of structure which I can adjust them so that it can be more visible. The candlestick, so do something like that. Those are breaks and breaks. So clearly the price is still on a downtrend. So we want to enter this market on a sales, but we have to identify liquidity. From this region, we see we do have this Asian. Remember, if I open back to that Asian range indicator, we'll give you this first session, which indicates that is the Asian high. Okay, so we do have this area, and we do have this another area. We have this another week. So from what I have learned in something like gold, they always tend to take this on liquidity. So from there, we try to mark this region as our liquidity for today. So this region will be the X representing the liquidity the market need to grab. Okay, this is in a 15 minutes time frame. Maybe you can adjust back to 30 minutes. You can see that you can see it just play out on that candlestick. Let's go back to 15 so that we can have a good point of interest. Okay, let me close this indicator and then go back there. This will be our pure high, the last candlestick on that entry point. Okay, that will be the last candlestick on that entry point. Okay, let me just adjust those. Okay, from there, if we go back to our 30 minutes candlestick, you can clearly see this where the price is moving. Right now, it's still on downtrend on 30-minute time frame. Maybe you can even put this break of structure into one. Let's say the break. Let me just do this so that you don't have to use a lot of break of structure. You clearly see the market is always breaking these 2 weeks. Sorry for that, I have a cold. So from here, this is the zone that we know in 15 minutes, these are good pure high, so we just be putting that as a pure high. Okay. And we want to see this price maybe pushing back to this zone, and then this is where we set our pending orders, limit, sell limit, and then just adjust that. So the recent high. Always put a stop loss on this recent high. Okay. If you have a high on your supply zone and your demand, always try to put your stop loss just above it. You can even use the trend line to mark this high and just adjust your stop loss just above there. Just have a small room for break. Okay, and put your take profit on the next demand zone of the next liquidity, something like that. So from there, this will be our setup on gold. So this will be a good sell for liquidity grab. So these are very valid sells. So these are setup. Okay. So this will be our setup on gold. Not how you usually find our good entry point. Setups in the market using liquidity graph. Okay, let's continue with another currency pair that we do have. Let me just go down on my watching list. I don't know which phase it. We have AUD USD. AUD USD, this is a setup that I gave out yesterday and we hit stop loss, but yeah, we had a good risk ratio which was 10 pips, and yeah, the price never pushed back to this zone. Okay, so this we had a sell yesterday on my elite team. Yeah, and then you can continue. You don't have to force sometimes with these entry points. Okay, we just clear this chart because it's kind of bad. So we have Euro AUD. We'll start with daily time frame. Okay, so on daily time frame, it's clearly that this price has not reached the supply zone. Let me see. Let me tap on the supply zone. Okay, let's say, for example, it has already tapped the zone. You clearly see it has tapped this on daily time frame. So there's high chance it continuing being failed. But for now, we do have this on daily time frame. Maybe we have this region. I mean, see this is the region where the price always been. Whenever it tapped that zone, it keep on rejecting. Okay. So we do have that region. Maybe I'll just mark from that point. We go 4 hours. You can even have that clearly on 4 hours. You can see this is the demand zone. Or whenever the price came, it always rejected. Okay. So from here, we know this price tap the daily supply zone. Now it's pushing maybe to this 4 hours demand zone. And clearly we can see this price has not played out to this demand zone here. See, so we need maybe this play out before continuing up, something like that. Okay, if we go back to a smaller time frame, you can see something different. Okay, on a smaller time frame, we have something called change of character. Why am I saying change of character? Because you can clearly see that this price was in a downtrend, and this was a recent higher low, and maybe a lot of sellers were anticipating to sell from this region for continuation. Okay, most maybe SMC's traders were selling at this point. But if you look at with our liquidity graph entry model, this region will always consider as liquidity zone, because why? We have this break of structure here. Okay, let's delete this. We do have this break of structure, confirming to her that this market is still on a downtrend. Okay, and we always want to enter this market whenever people are being liquidated, and a lot of traders will always sell at this inducement zone expecting for continuation, but the price is on the liquidity zone. So from here you can clearly see this zone is another liquidity. You see this region is a liquidity zone, so you don't want to open your entries on your liquidity zone, and you focus on the next supply zone or maybe a point of interest. And you can see the price whenever it came back to after taking out this liquidity zone area, tap to the pure high, it has that rejection with the direction of the market. Okay, so uh, from there maybe you can if I was to take this trade, maybe I could have just enter from this region, but I didn't see this setup, so I never took the trade. Maybe I could have opened my entry from that region, continue with the direction of the market. But let's focus. This already has played out, so we are not going to focus on this region for today. Now let's focus on the next setup. Let's say, for example, we switch to 30 minutes. And remember, we just use the Asian range to come back to our Asian. We see this way the price, generating liquidity. We see the highest point. We have the liquidity there. So from here, we can determine if we will be having the shorts of something like that. Let's say, for example, you can clearly see this price on this supply zone here. The price broke. So this zone will name it as change of character, because this price changes character from being sales, now it's pushing up, and it was retracing back to take out this liquidity and to tap on this pure high for continuation. So having that all in mind will give you room to understand how the market played out. Okay, from here, recently we do have this generated lower high, like a demand zone or a pure high, this zone. Okay, we have this zone, but you can see right now the price is just accumulating some liquidity. Okay, maybe expecting during London to tap with this zone and continuation buy, because it's already give us some choke on smaller time frame. Okay, so if I was to take this trade, I could be setting my stop loss just below this zone. Okay, so anything, if this price decide to break below here, it will be invalid. So for example, if I were to take this trade, I could wait maybe the price to retrace back to this zone and then continue buying, because we do have choke of change of character with choke, and maybe liquidity played maybe on this region right now. As we speak, maybe the price is generating, but I want to see first liquidity be generated. So for now, I will give it time. And this price might push down from there without generating more liquidities before London. I want to be trading that market, because it might even go for that 4 hours demand. Okay. Okay, so let's go back to another currency pairs, so that you can have that picture. This is how I usually analyze my market, and then I share setups every day. So just matters of understanding how this market played out. Okay, this is GU. Let's say GU. GU, we had this breaks and liquidity being taken out from this region, and you can see we have another supply that maybe the price is not mitigated. Extreme one there. You can clearly see maybe this week maybe have generated another liquidity to take out some sellers on that market. So we'll consider that in higher time frame. We all know that we do have unmitigated sales on above. So this price might even push high before continuing down. Okay, let's go to 1 hour time frame, so you can see something different. Okay, from here we do have breaks in this market. We do have this break here. Just mark that break. Okay, and then we do have these zones. These are order block. These are very good order block. From there, we clearly can see now the price is generating these wicks. I want to see these wicks being taken out maybe before continuing up. Okay, so I want to see this price maybe retracing back to this zone and continuing. So from there, maybe I'll enter my trades. I'll open my trades once this price tap that zone. But remember, today we do have CPI a bit. I think we do have CPI later on New York session, so we'll see how it play out. If that price might tap us before, the better. Even yeah, but you can see if CPI can push the price to here, continue, it can be way better. But we'll see how it play out along. So for now, we'll just mark this zone. Now the liquidity zone area. Okay. Yeah, so that's I'll be monitoring that with my team. I'll share my setup. Okay, this is on euro. Let me just, I think euro for this week I don't even have a good setup. Maybe some retracement to this zone. I might look for buys, for continuation buys, to be honest. But you can clearly see this is another good setup that I shared last week from Euro. See how the price pushed, generated some liquidities here, and once generated, you tap to the demand zone on 45 minutes. Let me just switch to 45. As you can see, the zone that I marked on 45 minutes. You clearly see this was the order block. I know some people might take their entry from that body, which is okay again. If you want to take from that body, it's okay. From week, it's okay at the end of the day. So depends on how you take your entry. So from here, we can clearly see the price that generated this liquidity. Okay, on higher time frame, this is the liquidity that the price generated, and once it had generated, it just move and take out the stop. I hit the stop loss of a lot of traders there and moved the direction of the market. On a smaller time frame, like 15, there's a setup that I shared that was a day trade, or maybe last week on Monday or Tuesday there. You can clearly see this was on 15 minutes time frame. We had the same thing. This was New York, not New York, I mean London session liquidity. Okay, so this was the move during London to break above, creating this breakout structures, giving us this good demand zone or trading zone that you can call it whatever. This is where you open your trades. So at the end of the day, this is where I put on my entry and we hit take profit, which is 40 pips, which is with a good risk ratio, like maybe using a lot size of 1, we could have made at least 400 or something like that. Okay, so that's how you identify this liquidity. And you can see from there, I never had a setup because this was not even a good confirmation for me to enter in the market, because deep down I knew that the price could have just accumulate this, take out this accumulation, go to this swing trade, and trade out along. So today you have to be patient and have your entry point and see liquidity be generated. Like for now, we can see this price hitting these wicks. So this wicks is what I will be using for confirmation for me to even identify this zone as valid. Okay, so I want to see this accumulation be kept maybe during London and New York when the CPI come. I want to see a drop and then continuation, things like that. Okay, let's go to another setup here. I don't usually trade AUD. I think this was GBP JPY, the setup that I was analyzing yesterday with my student. Yeah, I think he had already been taken out of break even for the price pushed like so many pips, 65 pips, which was okay. This was yesterday that we talked with my students. So let's continue. Euro, I think we have no setup there. BTC. Most of the time I don't trade BTC. Euro card. Euro card looks very same structure as the Euro USD and GBP USD. So this setup just look kind of the same. So this is the monitoring zone that I will be looking at, because you can clearly see this is the break. The market is still on the upside. Okay, and then we do have these weeks. Okay, these weeks, remember these are the liquidity weeks, so I want to see this price maybe retracing for continuation. So keep it simple like that. Keep it simple and see, you'll see the results at the end of the day. Okay, this was a USD card, and we had analyzed with someone yesterday, I guess. So let's do that, and you can clearly see this price has just maybe break down this region. This is the demand zone, which was the strong demand zone, and this price just violated and creating a break of structure there. Okay, right now currently you can see this price is making these wicks, which will be our liquidity. So we'll just be making these regionals. X, X being representing liquidity. So from there we just put our entry point from the extreme pure high or stop loss, let's say just above the zone, which is like 13 pips, or take profit 70 pips there. So this is the setup that I want to see. Maybe on USD card, I'll give out on Elite Team 2, I'll give out the setup for continuation down. Okay. Yeah. Okay. So that's basically how we identify liquidity grabs entry. You just have to mark liquidity region and focus and be patient and wait and wait and wait. So this is the goal that maybe I'll be looking at today. And we'll see if we can take some profit or it will be something else. So till then, take care, guys.